Also making a big up move. The stock is surged close to about 15%. Its 1,200 crore rights issue closes tomorrow. And ahead of that, you are seeing a lot of buying. It's turning up as one of the top traded, volume stocks as well today. Prakash Diwan is here with us on the show. Prakash, before we get chatting about some earnings reaction, what about Reliance Industries? Big move over the last 3 days. What have you made of it? Is it ready for a leg up?
Good afternoon, Rima. So I think it's very obvious. Everything related to the businesses that Reliance Industries straddles has kind of started coming together very nicely in terms of the visibility of growth, whether it's the gas business, whether it's Geo itself, and then of course we're staring at a festive season that could probably break all records as far as retail engagement goes. So I think from that perspective, that it's a stock that's finally seeing that magical, firing in all cylinders situation. And secondly, you also had an oversold, behavior that was bound to reverse at a point where the Nifty itself has been sharply, moving up against all odds. And then that participation from the institutional investors and particularly the money that's kind of coming in is likely to definitely go into these heavy weighted stocks for sure. And then that's an adjustment when you have a lot of exits from IT, a lot of exits from other heavyweights. You would have to kind of tend to still match up to the overall Nifty weightages, and then that's precisely where Reliance actually gets. And if the numbers are encouraging enough, I don't see any reason why this momentum cannot continue. I mean, the fair value of the stock definitely gives you that comfort from a pure risk reward perspective.
Okay, just go back to the rupee for a quick bit, as Nigel was highlighting. It's just a very, very sudden move. That's it. It's not as if it started early on and it's kind of went on. Unusual to see this kind of a sudden move, and there's no real news flow or anything to explain this, not yet. But look at that. I mean, currency move like that. Usually we have a stock chart and we'll do some stock spotting, but this is the currency which has fallen 0.5%, and almost all of that move has come in the last 15 odd minutes of trade.
By the way, strengthened a bit, right? In the morning, what was the level when you guys were tracking it? Closer to 112?
112 or so.
Yeah, now it's 112.5. So there has been a spurt in dollar index. There you have that level. In the morning, I think yesterday's closing was about 112.1, 112.05, thereabout. So dollar index has also strengthened in the last few hours.
Absolutely. All right, we'll try and get more on this, but for now, let's get back to stocks. Ultratech reported numbers just about half an hour back. How are the numbers looking? Nigel?
Well, the numbers are more or less in line. I'll tell you what, after the kind of cement results that we got, the street will take it. The problem was that there was a bit of a whisper number that will be much better than street, than what the poll threw up. So maybe that didn't happen. But otherwise, the numbers are fairly okay. No big complaints out there. Revenue number is better than what we were working with. The EBITDA number was a little bit better, and margins were more or less in line, while profit number as well a little bit better. Let's focus on the top line. Why was there a beat? Well, remember, volumes were in line with what we were working with. The good news is that realizations were a little bit better. So that explains why the top line did look pretty good. And in fact, the other operating income, that as well was higher on a year-on-year basis. The volumes expected to grow by around 8%. The domestic volumes did grow by around 8%. That we're talking about is grey as well as white cement, both put together. And the consolidated volume growth was around 7%, which is par for the course. The margins, that was where there was a bit of a miss out there. The power and fuel cost, well, it spiked up on a low base. The problem is even on a sequential basis, it's up by close to around 7%. The average diesel prices in the past quarter did pop up by close to 5% Q on Q. And there's been an increase in raw materials, whether it's fly ash, whether it's gypsum or even slag. The blended fuel price, per ton, that's moved up from around $185 in Q1 to around $200 in Q2. So that is expected to cool off. But on a year-on-year basis, obviously, it will be much higher. Some bit of, a bit of an issue is the debt has moved up. But that is on expected lines because they have a big capex plan. They have highlighted that because of capex and also elongated working capital, both those two reasons are playing out. But otherwise, things should, improve from here on. So these numbers coming more or less in line. The stock is trading more or less flattish. Prakash, the stock is down 25% in the last 1 year or so. It's trading at around, 13.5 times odd. The 10-year average is around 15 times, EV upon EBITDA. Would you bet on Ultratech Cement, or do you believe that there are other names that you would rather bet on? These numbers, actually, they look pretty much in line, and they're fairly okay. I don't think the street will be very disappointed with them.
No, absolutely, Nigel. So, on the numbers, I think you also need to remember the fact that there was a maintenance shutdown, and in spite of that, you got these volumes, you got all of this growth. Interestingly, this is one company that also highlighted the fact that there has been some enhancement in employee costs. So that's also kind of built in apart from the raw material cost. So all in all, I think it's a very strong set of numbers, and to continue to grow at scale, that's the challenge. If a 2 or 3 or 5 MT company does this kind of a thing, it's fine. It's understandable. But here you have such a large company, the largest actually, and that's commendable. I think on the price itself, Nigel, it's so interesting that Ultratech offers you, it's kind of tending to become more like the Asian Paints or the cement sector. It's kind of giving you that resilience with every quarter, with every new trigger in the business. It's not looking for any acquisition. There are no questions of that. They'll probably put their heads down and then just focus on capacity expansion, which will actually in both the phases turn out to be a very, very fortuitous times in terms of growth. So I think you have a good bet here. The delta that you could create in terms of where you are and what you could do is much better in smaller companies, given some potential M&A triggers. Nuvoco is probably one of the best names, given the fact that it has geography to support any kind of a potential acquisition by some larger players like the Adanis or something. So I'm just guessing. I have absolutely no idea of what will eventually happen, but it does offer you a lot of salience in addition to just the cost advantage of a small cement unit.
Okay, let's also address Nestle. They reported a mild beat in its Q2 earnings. Revenue and EBITDA came in ahead of street expectation. Mangalam is here with the earnings fine print. Mangalam?
Well, Nestle reported a top-line beat in their third quarter of calendar 2022, with the revenues growing around 18.3% as against street expectations of around 13 to 14% growth. And that's actually trickled down to the bottom line as well. So the revenue at just shy of 4,600 crores is above street expectations of just a little less than 4,400 odd crores. EBITDA coming in a little over 1,000 crores, again, a poll of, little under 1,000 odd crores. And that means that the net profit at 670 odd crores is above street expectations of 650 crores as well. The domestic business led their revenue growth. 18.3% is the growth that we saw, and that's the fastest that we've seen the company grow in at least the last 5 years. And export sales too increased by around 15.7 odd percent. The company says the entire growth was broad-based, double-digit growth led by volumes as well as mix evolution, and they've seen growth strong in specifically in large metro cities, even as smaller towns are catching up. The only fly in the ointment for the numbers this time around would be margins coming in at 22.1% as against expectations of 22.7%, and that's because gross margins have continued to dip for Nestle, and at 52.8%, they're at a multi-quarter low, if not the lowest ever for the company. However, on that as well, the management tried to soothe the frayed nerves. They're saying that early signs of stability in edible oils as well as packaging materials is what they are seeing, so that could support the margins going forward, even as prices of fresh milk, green coffee as well as fuels will continue to remain firm. For Nestle, the stock has underperformed this year and trading at around 61, 62 times. Let's see whether this beat on the top line is enough for the street to take a look at Nestle once again, primarily because they're also going to soon get the pet care business into their fold.
Okay, that's Nestle for you. A bit of a miss in the gross margins, but the street is hopeful things will improve. Prakash, quick thoughts on Nestle? And ahead of the rest of the FMCG pack, is there a particular favorite?
Rima, I think the Nestle numbers are very, very good. Given the environment in which it kind of operates, and remember, Nestle is now a far bigger product basket than what it used to be, let's say 4 or 5 years back. Given all the successful inroads it's made into its new product categories, and if as Mangalam said, if pet care is going to be added to it, you have an altogether new segment that could start getting robust in a few years. But what's interesting is that all the cost control initiatives they started off when petroleum prices led to sharp increases in a lot of raw material and logistics costs. That seems to have got digested, and now all the price hike that they had actually done in the first 2 quarters of calendar 22 have also kind of started supporting the margin growth. So that 22% miss that you're talking about is probably just a blip, and then it will come back. And the growth is so phenomenal. I'm very positive. 62 times is actually the pain point. You buy Nestle at a time when something goes wrong with the overall market, they sell offs, and then you get it at softer valuation. on the results that are expected tomorrow, Nestle, whatever is working for Nestle is likely to work for some of the other names. ITC comes to my mind because I'm a bit lazy. It gives me the salience of the hotel business, the paper business, and the FMCG business, along with the cash cow of the tobacco business. So I think you'll probably be pleasantly surprised once ITC comes with the numbers and how it can reposition itself strongly to this space. So that's still the favorite pick out of the lot.
No, I don't believe you're lazy, Prakash. I think you work hard, have views, and read up